Okay, now we're here. We've got your questions. We'll see if we can just maybe squeeze Dan in with me, so we'll be side by side if that's okay. Just because we've got these little issues going on. We have done it before. That is not what I want. That was not my original plan. And Dan knows when I have a plan and we have a little deviation, I'm not happy, mama.
Hey, Sharon, are you able to hear me?
Yeah, I can hear you. I can hear you. Yeah. So
Amazing.
we're
All right.
Dan's gonna come back and we're just gonna squeeze in together and we're gonna talk about all this stuff. Got your questions, so got those ahead of time, and
Good.
we can address all those things. That's not a big deal.
Fantastic.
Sorry,
Fantastic.
we just had this little camera thing going on, and
No, we're good.
we're gonna have
We're good.
to troubleshoot the camera as well as Dan's gonna be working with our IT person regarding the migration
Yeah.
and moving forward to on exchange. Yeah.
Yeah. We'll give it about 4 or 5 minutes and then we'll get started then.
Okay, that'll be just fine. We'll get him back here and then we can start. I just thought it would be a great contrast because you're in aerospace, he's in aerospace. It'd be
Yes,
like
I agree.
you guys and the lady, little different dynamic,
Right.
make it work.
I think it'll be great. Yeah. Awesome.
Let me please make sure he's coming. Hey, Dan, you are coming back here, right? Hey, Dan, get back here. Okay. All right. Yeah. Well, you're gonna have to give up on that. We're going to Plan B. And the lawn mowing crew is not here today or anything else, so we're good. I'll put this in another room. Okay. I'm putting my code in here, so we'll close the door. Okay.
All right.
Come on in. Okay, where do you want to be? Do you want me to be on the outer side and you
Just
on the
no,
inner side?
go back go to that side. Yeah,
All right.
it's quicker and easier.
Okay, we'll have
Once you
me
get
on.
in your seat.
I have to close the door. I can always close the door. Have my system, Dan.
But you usually close the door to keep me out of the way.
And normally
So
you
you
do,
don't
but
hear
today-
anything I'm doing in the other
But
room.
today, okay, I'm gonna
Okay.
change the name to Sharon Dann Riddle.
Yeah,
All right, here we go, and I'll get my face in more.
yeah. I can turn a little bit here
Okay, yeah, you need to turn.
and you can go forward a little bit to your left also.
And Sharon Dann. Okay, here we are.
Turn that sideways so you can get in there. All right.
Okay, here we are. You're kind of in the foreground. Can you move up a little bit?
Oh, you want me like that?
Yeah.
Our heads are about the same size, so right.
Yeah. Let me see if I can squeeze in a little more. Here we go. There you go. Can you come up anymore? Yeah, that's better. That's better.
Are you good yet?
Okay. I'm gonna actually move this chair down just.
Well,
No, that was too much. I wanted us to kind of be
all right.
the same. No, I'm a little too low. Okay. That's okay.
Are you through?
This is I have
I know.
aesthetics that I want.
She's done all the podcasts, Taylor. I've done a few.
Okay.
All right.
Here we are. I think we're aligned. We're good. This is Plan B, but our content is going to be there.
Sounds good. Well, I just want to welcome everybody that's here so far and those that will be joining in. Thank you very much, Dan Riddle and Sharon Riddle, for taking your time to speaking with us today. I think it's going to be a great conversation for a lot of people that are interested in getting into multifamily and real estate. Uh, I think it's going to be a good mix. We'll have a good time. How's your day going so far?
Pretty good.
Yeah. it's pretty good. Well, we're really looking forward to doing this with you together. I think it's going to be
Right.
some really,
Yeah. We hadn't
uh,
done one together in a while.
yeah,
So
it
it's
has
good.
been some time, and I think that we're going to have some really strong content and a lot of takeaways for everyone, whether they're in the beginning of their journey, in the midpoint, or more experienced as far as a real estate investor.
Definitely, yeah. We can go into the entire span where people that are starting off and other
Right.
investors that are potentially already have multiple properties, assets that they've acquired. So yeah, I think it's a good time to be investing in real estate right now. I'd like to just share screen and see. Let me see if you guys are able to see it. Are you guys able to see it?
There it is.
There it is.
Yeah.
It's loading. Yeah.
Loading. All right. Fantastic.
Okay, here it is. It's here now.
All right. Well, I wanted to start off with the first picture that I seen when I go to your account. The picture of you, your family, and Robert Kiyosaki.
Oh yeah, that's a great picture, isn't it? Yeah.
Yeah.
That was
Talk
2019.
2019. Talk to me about this event, this incident. What did you guys learn from Robert?
Oh wow, we were learning so much from Robert, and a lot of people don't realize that when you go to an event and Robert is on the panel, and you get an opportunity to network with him separately, you really get the Marine pilot from Vietnam side of Robert Kiyosaki. And
Right.
so that he's it's the blunter side of him. The
He's a
softer side
Marine.
is usually on the stage, but the blunter side, Nora Riddle, our daughter, really was paying attention to, because he was really talking about he really addressed things in an urgent manner. So it's like, don't wait,
Yeah.
go ahead and get started, have a plan, and really be clear on what you want to do. And he really wants people to escape their W-2s, and he really wants people to be investors and not stay stuck in that self-employment quadrant like
Right.
my dad and my two uncles did their entire life. And that is the high tax quadrant. A lot of people don't think about that, but even running a small business, you're in that high tax quadrant.
You are.
My part of this story, my favorite part of this story was we found out like spring, he was coming in August or September. And I called our daughter, and she was in her first W-2 job after coming out of college up in Washington, D.C. And I said, guess who's coming to this event? It's a once a year event. And she said, I don't know, Robert Kiyosaki? I said, yes, he's coming. She immediately said, I want to go. I want to come. And I'm like, but you've never read any of his books. And she said, but Dad, you've been telling me our house is not an asset since I was 6 years old. And I was
Right.
like,
He has been saying that
okay.
for a while.
Yeah. And then she says, I'll pay my own airfare to come. This is her first few months after starting a job. She didn't have much money at all. So I said, all right, if you're going to pay your own way, I'll do this. I'll do this upright. So we went VIP the whole weekend so that we could meet at lunchtime with all the speakers, and had a special meet and greet and a photo op with Robert Kiyosaki. And it was just
And
a cool weekend.
and Dan and I have been blessed to meet Robert twice.
Oh, twice.
So
Okay.
we have been really
Nice.
blessed at the same kind of event that Brad Sumrock has put on every year.
My favorite part of Robert Kiyosaki is his face and demeanor lights up when he sees a younger adult or young kid. He loves it when the young people come, because one of his big mantras is they don't teach you about any of this in school. They don't teach you financial management and wealth attainment and all of that stuff. It's not in the schools. And he loves to see young people jumping into it. So,
and in fact, the second time we met him, that's when we found out that he and Kim, they decided that he would write Rich Dad, Poor Dad to help Cash Flow Gang sell better. It wasn't selling the way they needed it to. And he is so passionate about financial literacy. He really wanted cash flow game in the marketplace for people to have access to it.
Yeah. Yeah, Robert has influenced a lot of people globally, and having a chance to work with him and see how he thinks, how he invests, it's a fascinating experience, I'm sure. Today we're more focused about your experience, the last 25 years, so many years that you guys have been invested in the multifamily and real estate space. So just bring us toward to what you guys have been doing for the last 15, 20 years in real estate.
Yep, it was be 20 years exactly in March. And to start out, originally, what started us is looking for alternative income as we were getting older. We were in our mid 40s or so then, and we really wanted security. Well, I've been in aerospace most of my career. And everybody knows in aerospace, contracts come and contracts go. If there's somebody laying off, there's somebody hiring almost all the time. I have been very fortunate. I've worked now, was it 38, almost 39 years in aerospace. I've only worked for 2 companies. I'm unusual. Most people have probably worked for at least half a dozen in this type of time period.
Right.
But anyway, at that point, I said, what's the kind of security we want? What's the future we want? What do I want the end game to be to the aerospace side? You know, what I want to do after that and that type of thing. That's what started us looking at real estate. I was looking pretty deeply into real estate and also option trading. Those were my 2 choices. And it came down to a conversation with a trainer on the option trading when I was exploring that. He said, yeah, how much you work a day? Oh, about 4 hours a day. And all, okay. And he said, and is that all the time, every day? He said, no, when the market's open. And we asked him, well, what do you do on vacation? Well, I'll take my laptop with me. And I asked him, well, what does your wife say about that? He said, well, I'm divorced. That sort of ended that one. So we like the real estate because it's a slower pace, it's longer term, and we like the way the values climb. It really drew us to it. But we did what most people do. Where do most people start in real estate? Most of us have bought a house at some point.
Yep.
So it leans very heavily toward you. Well, I understand houses. You don't understand how to rent them, but you understand houses. That's where we started. And we did that. And we actually did that for 10 years before we started the multifamily. To go multifamily, it was really a case of how do we scale up better. In about 2013, 2014, we were starting to see pretty significant appreciation of houses, like 10, 11, 12%. That was unheard of in Texas where we are. Normally it's like 4 or 5%. The values are going up pretty fast, and we were starting to see a little more difficulty in getting the single family. The prices were going up, and you couldn't get the pricing advantage you need. You have to get a discount single family. If you pay more than 70, 75% of what its value is, you won't make money. So we needed another alternative. And that's when we said, all right, maybe we go to multifamily and scale up there. That's what led us to it.
We did the pivot. But we leveraged the skill set and all the knowledge that we had acquired over a decade and leveraged that into multifamily as well. And we found out when we went to Brad Simrock's first rat race to retirement, a lot of people did the same thing. They made that same pivot. And so that is what we did. And we had some seed money. So that was also helpful. So what we ended up doing is strategically over time, we were doing a stagger sale of the single family portfolio and kind of rolling that into multifamily, as well as having some seed money to even start with multifamily before we made the transition. So that's how we kind of approached that.
Once we'd been in the multifamily about 6 months to a year, we really decided, I think it was about a year, we had a house come up that someone moved out of and said, hey, let's test the market on it. Maybe we'll just sell it. And it went real quick and we made good money on it. All right, let's just rotate. So as renters moved out and houses became vacant, we just fix them up a little bit and sell them and rotated all that money over. So the funny, sort of humorous part of it, The last house we sold off was in 2019. And that was after we'd been in multifamily, about 3.5 years at that
3.5
point.
years.
And we
And it was-
sold it off.
It was our most modest property also.
And the funny part of it, it was also the first house we bought in 2005. So we sort of
interesting.
began and ended with the same house, but
Yeah.
very happily moved on to the multifamily world. We felt it was what we wanted. It was much more scalable, be able to go on a larger scale, and really it's the wave of the future. There's no way we want to go back to single family at this point.
Yeah.
Except, working with other individuals, some things like that, where they have some expertise there. But the scale is in multifamily. It is in the larger commercial properties.
Definitely. You mentioned it's the wave of the future, which I definitely see. That's where wealth is accumulated.
Yep.
A lot of people may see, especially starting off, that investing in apartments is very difficult. Why should they invest in apartments when they should start first with rental properties? So can you talk about the difference and the benefits of going big?
Certainly. We still associate with a mentor we had way back 20 years ago. And most of the people in his group are single family, different kinds of investing. There's different ways to do it. And the way I've explained to them, sometimes I just ask them, could you go buy every house on the block? Could you buy every house on a single block? Have them all there? And of course, they're going to say, well, no, that's statistically just not going to happen. They're not going to all be available unless you build a new subdivision. You can't do that. I said, well, it's sort of like that, because when we had single family, we had stuff in 4 counties around the Dallas-Fort Worth area. That's a pretty big spread. You're going to spend anywhere from 20 minutes to maybe 45 minutes or an hour to get to one property. If you have an issue to go there, you have to go to that one property. But imagine if you have them all in one place. That's why I sort of use it. What if you could buy every house on the block? Is because then you go to that one area, you can take care of all the issues at one time. The efficiency of your time is just light years ahead of it. So in reality, apartment, no, it's not one block, but it's 100 units or 150 units or 200 units on one location.
Right.
And the other big shift is you're not buying a property. When you go to multifamily, you're literally buying a living, breathing business. You're buying a whole business, and they're evaluated based on income, net operating income. You take it, you improve it, the net operating income gets higher, it's worth more, and it will appreciate, and you can sell it in a few years, 5, 6, 7 years, and make a lot of money in the process and at the end. And so it's cleaner. You don't have to spend as much of your time chasing the details.
Well, also, one thing that I valued with multifamily is you had third-party property management. And I had self-managed our portfolio in single family. So Dan was talking about the 4 counties. Well, I had to develop teams in all 4 counties as far as handymen, general contractors, that means electricians and plumbers most of the time, as well as anyone who had to haul off anything. If you had, and the whole time we were self-managing single family, I only had 2 evictions. So I was really fortunate, and I feel like I was a really pretty stringent screener regarding my tenants, so that we only had to deal with 2 evictions in that whole time period on the single family side.
So almost everything in the multifamily, you're doing more at scale.
Yes.
As she mentioned, you bring in property management. I had a brother-in-law for years. He knew we did the single family stuff, and he had always end the conversation by saying, I wouldn't want to mess with toilets or tenants, and which we really didn't do that all the time. We had handymen and stuff.
Yeah, the handyman helped.
But when you move into apartments, if you bring in a property management company, they're worrying with the toilets and tenants and the details. True. You're stepping up more at a management level of you run the business, you make the business decisions, but you don't have to go implement everything yourself. You bring in the right contractors, the right people, so that they cover the day-to-day operation. You're not up to your neck and all that. You're just giving the guidance. Here's where we want to be. We want to get the occupancy at this level, and here's the ways we do it. But they're the ones responsible to do all the detail work, the nuts and bolts and turning wrenches and stuff.
And they also produce the financials, the monthly report
Typically.
that go out to the investors.
Investors.
Mhm.
Yeah, which is one thing that investors like to see. What is their return in the initial investment that they're putting?
Right.
Some people
And
may
Taylor,
have,
I will tell you that over the 10 years that we've been investors, we invested in 18 multifamily properties. I have read each and every one of those monthly reports. And
Wow.
I have called general partners who have brought me in if those financials, if the monthly reports, any of the key performance indicators are not in alignment with where the property should be in the business plan. So sometimes those have been some tough and difficult conversations.
Right.
Not all of them have been happy, cheerful conversations, because sometimes the properties have not been where they needed to be in the business plan.
Definitely. I understand that a lot of people would have, especially starting off, what if somebody has $10,000, 15, they may not have $100,000 in reserve to invest in multifamily. What would you suggest them do?
There's a couple of ways you can go. There are some options now. If you're just trying to invest in real estate, the easiest way to do it is go through REITs, but there's a key drawback to that. REITs is the way you're buying it like a stock, and it goes up in value. But if you're more involved in it and more of an owner through a syndication or another way, you get the benefit of the depreciation. So basically, all of the deals we've been in, the amount of money determines your percentage ownership of the property, but you are a business owner. So not only do you get the quarterly distributions, and also you'll get, the biggest check always comes at the end when you sell it and all, but then you also get the benefit of depreciation that reduces your taxes. So you have to be careful how you invest so that you're not, if you invest like a stock, you won't get that. And that's a big component of it. And right now, in 2017, a tax law was put in where you're, let's say, less the building and the land, you could roll all your depreciation into year one. It's called accelerated depreciation, bonus depreciation. Right now, in this the new law, the spending bill in Congress, they're trying to extend that again. Now, we didn't get into the multifamily because of bonus depreciation, but it's an extra plus. So there may be that opportunity if they extend that law where that can still, so like all of the contents, your appliances, your countertops, your carpet, flooring, all of that can be written off and you could get that depreciation benefit in year one. And that's very significant. It can basically eliminate any taxes you have to pay the first few years.
But I will tell you, going back to your question, Taylor, on the smaller fund investors, I have been on some podcasts with some individuals who actually have contributed to a fund, and they were like crowdfund investors. So that is something that has developed and has arrived on the landscape that wasn't initially there.
That's just the last couple of years or so.
Yeah,
that you can actually
thing.
Do crowdfunding for a apartment purchase or a large commercial purchase, and that would enable people, the smaller investors, say they got $500 or $1,000, all that. What we have experienced, all investments we've been in, typically are starting around 50K or more.
Right.
And
Majority.
part of that is for the ease of, you don't want 2,000 investors to try to run a deal to have them all involved, but it's an economies of scale thing. So typically, if you can get up in like at least the 40, 50K, you got a pretty open door to get investments. And for us, we've invested like between 50 to 75K in each property we've been in. And it's sort of fun in a way because you invest it within. You have to adjust the numbers a little bit now with some of the inflation and impact we've seen in recent years. You can basically double your money in about 5-6 years. So you put your 50K in, guess what? You'll get some distributions each quarter, and then you get your depreciation benefit, but then you get the big check when they actually sell it. And in about 5-6 years, that 50,000 becomes 100K total if you add everything together. Then what we do then is, okay, let's reinvest that, split that into 2 investments and go in 2 properties. And you can, if you have some money you can dedicate to it, you can start growing it in a big way over a couple of decades. You could have a lot of money amassed.
Right. But I will say syndication is very powerful in that, because on a podcast I was on, and this was an individual who, he's a Cardone investor, so I'm going to talk about that. And that crowd fund, that is how he got in. And I will say his wealth has grown slower than our wealth, because we have that multiplier effect, and we're looking at legacy wealth. So you have the picture of our daughter. Well, we're looking at our family legacy, and so that's very important to us to have more money that grows more money for our family and for our legacy. Yeah, that's kind of where we are in our lives.
Of course, starting sooner is better than later.
Yes.
But you can start at any time. But just imagine, say you have kids and they'll be going to college in 10 years. Well, if you could put that first 50K in about 5-6 years, that becomes 100K. And then you reinvest it again. And when we reinvested, it'd be 2 properties. And you do that, and guess what? Another 5-6 years, that's up to 200K. That can go a long way toward paying that college. If you can start earlier, it's always better. But even if you're wanting to amass that kind of money, even after fact, to pay down the college debt that you take on or they do, that's our biggest pride of everything. Our daughter went to a private university, and she got 2 degrees in 4 years. A lot of that had to do with her, but we had the opportunity to send her to better schools. They weren't Ivy League. We weren't going top tier, but they were pretty good schools, well known. And she went up and she was basically got her first job in DC based on the recommendation of Nikki Haley. And part of that was because one of her 5 unpaid internships on top of the school was at the UN working with State Department when Nikki Haley was there. And so that's the stuff we're looking at, that, gosh, how much of this is linked together? You look back and say, if we weren't doing the real estate, we probably wouldn't have had as easy a time helping her do those special things that's launched her. And guess what? She's been working, 6 years?
6.5. She's
6.5 years. I've been in aerospace going on almost 40. She makes more than I do. And so she's just, but part of that's her. I have to give her credit where it's due. She's one of those go-getters that just never had enough knowledge. She was the one that, if the instructor in college said, hey, if I've done with the material, I'll let you go 15 minutes unless there's a question. Right. She would be the one with a question. So it's sort of.
But cycling back to what you're addressing, paying for college is doable. It is doable. And I will say our strategy was a little twofold. So I'm going to have a little quick takeaway for people, that not only can you pay for that college like we did and those unpaid internships, but having an additional strategy on top of that for moms and dads. At a real estate event, I found and met a national scholarship expert. And guess what? I leveraged his skills and that of his team, and I negotiated a partial scholarship for Nora Riddle on top of it. Yeah. So you can use a lot of different strategies, and you never know who you're going to meet at a real estate event too, that can help you in a lot of quadrants of your life.
That's true. That's one of the ways we actually met, through a real estate event, raising capital event, which launched a lot of the things that we're doing.
Yeah, that is. Yeah, we met at Race Fest. Sure did.
It's really amazing how things can progress. And if you really think about legacy, What are your kids going to get from you and even their kids? The one thing you have is time with them. I would encourage any parents out there. Your kids are watching and listening all the time. They may not be reverbalizing and telling you what they're picking up, but they're paying attention all the time. They watch what you do. So if they see you saying, just sitting back in that W-2 is not enough, we need to do more, they will want to do more. Now, a lot of investors we know, their kids aren't in it at all, but there's a few of us who have them in. Our daughter right now has some money set aside. The next one we're in, she's actually going to join us in a joint LLC to start investing directly in apartments herself.
Yeah.
And
Good.
what this does, the thing I cannot say enough for this, if there's one thing you can do with your life is pay attention to what the wealthy people do.
Definitely.
And a high percentage of wealthy people on real estate, a lot of multifamily, other real estate too. They're in this and they do this because, and they pay less taxes than most of the average people, or even some of us that are a little higher earners. They pay less taxes because they know how to use it to their advantage. The government, and this comes from, we also got to have a number of sessions with Robert Kiyosaki's CPA, the one that does his books. And he basically said the tax codes are written to give you incentives. And those incentives are trying to get you to do things that benefit society. So what's a big need in society? Housing. Housing is important.
Huge.
And you get some special tax benefits like depreciation when you put your money and own a business in that doing those things. So why wouldn't you want to support? The government's encouraging you to do it. Take advantage of those so that you are helping society in a lot of ways. And then it gives you a more sturdy, reliable income so that when I retire out of my aerospace job, I won't be worried about Social Security. I won't be worried about Medicare. It won't matter whether they're here or not. Now, don't get me wrong. I want that to be there for the people who need it. I don't want anyone to suffer. I want them to have their Social Security. I want them to have their Medicare and their support they need. But I'd rather be in a place with my family where I don't have to have that. I'm taken care of regardless.
Yeah, you want to be able to make those choices.
And that's what you call financial freedom. It's really financial freedom that no matter what happens in the world, you're okay and your family's okay.
Right. So what other things are you going to want to hear from us today? Talk to us, Taylor.
Right. From my experience, one of the things that's been very transformative is partnerships, joint venture partnerships. And
yes,
that's opened up ways and opportunities for me to start in real estate and then continue acquiring assets. Can you talk about key partnerships, strategic partnerships, and joint venture partnerships as well? How can people use that strategy so that they can acquire real estate, not on their own, but leveraging other people's credentials, experience, and net worth, and everything else that comes with it?
Sure, we can talk about that. There's been a couple of properties that we've been best and final in as far as multifamily. And through syndication, that was kind of the vehicle that we chose. We were leveraging some of the experience and net worth of a lead partner who was in that. We actually found the properties. Dan was kind of lead on a lot of the underwriting, but this individual who now lives in Tucson, Arizona, he was the one who had actually gone full cycle. We hadn't gone full cycle. And full cycle in multifamily just means that you've had a successful exit and a property that you acquired has sold. So that's kind of been our experience on a couple of the ones that we put in offers for.
For a lot of folks, if you start in single family, you can do it yourself and you work you get certain contractors and other people to help you. But when you get into multifamily, because of the amount of money, you're not going to be able to do it on your own, all by yourself. On one note, you're not going to be able to cover a note by yourself. So you need it to be a team. You need a group of general partners that actually run the deal, and you also need the limited partners who basically invest their money with you. It is a team sport. And the thing I like, one thing our mentor, Brad Sumrock, will say is, when you decide who you're going to general partner with, it's almost like a marriage. You're going to be together 5, 6, 7 years on this. Sometimes those go real well, and sometimes they can get rough if you're with the wrong people. So you need to get with people. Number one, you have to have the same similar headsets about how you approach it, how conservative or how much risk will you take on, how do you balance risk. You need to get the right people around you. And then for the limited partners are basically investing their money. They don't really get a say in how it's run or anything. They're just investing their money. You need to be picking what general partners you invest with very carefully, because it's huge. You got to get with the good people. You got to vet them. You got to make sure their references and all of that stuff to make sure you're with the people you want to be with. And definitely, if you're a general partner, you gotta be elbow to elbow taking care of that property for 5, 6, 7 years. So we've seen some partnerships that don't go well and some that go real well. And so you got to vet your people and know who you're doing business with, and pick them wisely.
But Taylor, I will also say in my second mentor, because I'm in Raise Masters also. That's kind of been the place where I've seen some joint ventures work out very, very successfully. Okay. And not just in multifamily, but in some other asset classes as well in real estate. So they have a lot of things going on in joint ventures over in that mastermind with Hunter Thompson.
And for people that don't really know how to build teams, who to connect with, what would you suggest them do? Should they go to conferences, meet with individuals like you that are high net worth? How could they get access to those type of people?
Well, I will say, take a multi-prong approach. Don't overlook the meetups. We are even sponsors of one RE club in Fort Worth, and that is a traditional RIA. Back when we began in 2005, you did have the RIAs, but you also have some meetups. And we actually met one of our partners. He was in one of our mentoring groups, but he was also a regular attendee of a meetup in Addison, Texas that we would go to. So not just large events, they can be small events that are meetups, as well as the larger events. So put all of those in your calendar. So that way you're really well-rounded. You can get the effect of the larger event, but you can also get the intimacy and the private conversations of a meetup. And those can actually help you cement some partnerships, because that's where you get to know people really well.
Right. Definitely. Yeah. Let's talk about how you can find some of these deals. You've talked about the importance of getting into multifamily, which I think our audience is able to understand. How do you find these deals? What is the best way to find these deals, underwrite them, make sure that they cash flow and they make money?
Real estate is somewhat different when you get into multifamily. There isn't the general listing of houses with the comparable prices and all. Like if you've dealt with buying your own house, that's the world you know. That's not the same world in multifamily. The reality is you can pick any city basically, but let's just say any of the big cities. 90+% of the deals that get that occur probably go through 2 or 3 brokers. There's a few brokers that dominate, and it's a little more specialized because it's bigger and the way it's valued is different. Having to understand like net operating income and how that's determined in cap rates is a unique term to that part of the business.
Yep.
And I never worried about a cap rate when we're buying houses, but you could calculate it, but we don't worry about it. But you really need to go through, you really ought to be going through those few brokers. They are your lifeblood. Yeah. They are the ones that have most of the deals. They know the market as good as anybody. They can usually go down inside history of some of the properties too, of knowing who bought what, when, and all of that. So you develop a relationship with them. And Sharon probably within every 2-week window or so, she touches every broker we're dealing with.
Yeah.
And
But I'd like to do a little deep dive as far as broker relationships, if I may, Taylor.
Mhm.
When you're talking to brokers, they get to know who you are, and you can leverage your relationships of other people. Since I am actually in 2 mentor groups, I talk about that. I also talk about how many investments I have been in, and they also know members who are part of our team. So it's a pretty easy relationship because I've been talking to brokers for over 2.5 years. It's a conversation you have. You let them know who you are connected with, because that brings you a lot more power than coming out there as a lone wolf. They immediately have more respect for you because you are leveraging the respect of your mentor or mentors in this space. And multifamily is very connected. It's very connected, and you really need to have those points of leverage to bring yourself into the forefront, so they're willing to take you on a tour, because you've got to tour the property. You do the underwriting, and Dan has done some lead work in that department. But you have to have that relationship too. And so that's kind of the way Dan and I work that. We really work on the numbers, but we also have kind of like the 1-2 punch. And the second punch is having that relationship so we can get to the tour and have individuals who will take you seriously when you do make that offer and submit your letter of intent. They've got to be able to respect you in that space. And you've got to leverage those skills and leverage other relationships you've established.
And also, in addition to that, I remember the effect the first time we made a best and final. We didn't actually win the deal in the end, but we were in the best and final. We actually had one of the brokers see that later on, and it was like 2 months later, they called us saying, "Hey, we got a deal you might want to look at." Now, we weren't the only ones they showed that deal to. I guarantee you they probably sent it to another 50 people or 100 people, who knows. But when they're looking at a deal before they've even put it on the market, they're thinking, hey, this might fit what they want. We were looking like in 100, 120 units range. And they see one like that, they thought of us. And there have been a couple of occasions where we got the raw numbers, what we call a T12, which is your profit and loss statement, and the rent roll. That's all they sent us. And we could start looking at it and analyzing it at that point and see if it's something we were interested in. And so, but the point is, they thought of us when they had a deal before we contacted them. That can only happen as if you already know them and have a relationship. You have to have this ongoing discussions relationship. Then they know who's in the market, and when they see a deal, they may immediately be able to turn and say, here's the people that came and checked this other deal out. And it's a relationship based thing. And they're probably not going to end up going with the people they don't know that come from somewhere they aren't familiar with. It's more likely the person that wins the deal, or the couple, or the GP team is going to win the deal. It's people that they know already and that they've seen as operators, and they've seen them in the business. So
just like in any business, brokers want certainty. They want certainty that you're going to be able to close. And one important question to always ask a broker, even if they don't have something that looks in your buy box, and I restate my buy box quite often as far as what our team and what we are looking for. Just ask them casually, what's in your pipeline? You would be surprised. They'll let you know what is upcoming. And that's something that I have developed in talking to brokers for 2.5 years now. Don't forget to ask the question, what's in your pipeline?
That's good. So just to sum it up for those that are watching and will watch in the future, the main thing that I'm understanding here, relationships is probably one of the most important things in getting into real estate. A lot of people put a stop or give themselves a barrier financially, and they say that I don't have the money to get into real estate. But start networking, start connecting with brokers, start connecting with potential general partners, start connecting with lawyers, accountants, people that start creating your team and start analyzing deals, and that's going to get you along. So that's one of the relationships is one of the best things you can do for yourself in real estate.
Yeah. Even if you want to just be, and we know people that were just a limited partner, they never ran anything. They just wanted to join deals. We've known people that have done like over 70 limited partner deals
In a decade.
in a decade. And that's just, he has 2 kids. He started LLCs with them, and now one of them, he just retired, and his son's joining him in an LLC to start trying to be general partners. So, but the whole thing really comes down to, you can just be a limited partner. You don't have to do the work of trying to analyze deals.
You don't have to.
If you can be a limited partner, you can grow your wealth tremendously over time and get to the point you can retire early. You can do what you want with your life. And also, you don't have to be in the leadership group in charge of trying to run everything to benefit in a great way.
But I will tell you too, Taylor, since we have been what many people would call on the hunt for our acquisitions, the fact that we do have a track record, even as limited partners, they know that we understand the key performance indicators, and we understand the financials. We are accredited investors because we grew our wealth, and that garners some respect from brokers as well. And so you can actually leverage that sort of experience moving forward into a role as a general partner, a co-general partner. And there are general partners who have asked us to be part of a team because we've had a long track record as accredited and experienced investors. We know what to look for.
Well, I think you really hit it right, Taylor, when you said a minute ago, it's about relationships. So I don't care if you're just a limited partner that's sort of along for the ride. You got to have relationships to learn and to meet the general partners and know who to invest with. And it's all relational to get part of those teams. Or if you want to be a general partner, then you got to have relationship with brokers and all of that. I call it a team sport because it really is. And sometimes you even benefit from other players in the business, not necessarily on your team. So the relationship and interrelating with people and getting information and building a track record with those people, I think that's a life lesson right there. But it's definitely needed in the multifamily.
Yeah, you really do need it.
Talk about a bit about some mistakes you see early investors making.
We've seen a lot of stuff.
It's been really interesting. The first 4 or 5 years we started in 2015, it's like you could throw your money at almost anything. You had the wind at your back and it made money well. I mean, one of the second deal we invested with, 2.5 years later, the guy comes back, we're going to sell because it's worth 3 times what you put in it. It is like, wow,
Even with the fire.
Yeah, but anyway, I mean, but things have changed a bit. In, what was it, 22, when we hit the high inflation, they had to jack up the interest rates. That's what the Fed does. And it started putting headwinds into it. And it's definitely more challenging now than it was. We have some of our investments we're in are not paying the quarterly distributions. They're being conservative to hold cash back to be ready to handle what the changing environment we're in. So the economy can change on you, but the whole thing is you keep investing, working through it, and you continue to multiply what you have and get stronger and better, and you make more in the end. Right now, with all those headwinds we've had the last 2 years, the building starts of multifamily is at a 10-year low right now. 10-year low. There's a whole lot of stuff. You can still see stuff out there that they're finishing out the construction that was already started. There's a lot still out there. They hit some records a couple of years ago of number of new units or new properties coming on, but that has stopped. So what you can say right now is 4 years out, 5 years out, there's going to be a significant shortage in the multifamily space. If they're not starting stuff right now, it depends on how long that gap continues. Let's say it's a couple of years before they really start up a lot more. That means about 4 or 5 years out, you're going to be at a point where you can make a lot of money and you can benefit, because rents aren't going up as quickly right now, but they'll come back. When there's more of a shortage, it pushes the rents higher. You can make good money. Now, it's a double-edged sword. You got to find a way to get into it now. The next year or two is probably the best time to try to get in, even though, a lot of people look at the economy and they're worried. They get worried and they stop doing, but just come back to Warren Buffett. He's got it all summed up. He says, when other people are greedy, be fearful. When others are fearful, get greedy. Well, we're at a time right now where a lot of people are sitting back and being fearful. We got some of our best single family deals in the middle of the Great Recession. And we recognize right now what challenge we have. I don't know if we're going in a recession again or not. We might not. But we remember from the last one, the best deals we got in that asset class came during that time. So even if we go into recession, we're going full blast trying to go forward and get the right deals, not just any deal, but the right deals, because we know in the hardest times come the best opportunities. And so this is a great time for new people to learn how this works. Get in and learn it. Don't just jump in. I had another friend of mine jumped into just buying houses and stuff a while back. He made every mistake in the book because he didn't go learn anything from anybody. He just started doing stuff. Learn before you do. Get involved and start learning. Get you a mentor. And right now, a lot of people we know, Brad Sumrock is the group we're in. Grant Cardone runs a different group that people can learn. On the East Coast, I think he's still active. David Lindell has been around for decades. And get with a mentor for the asset class you want to go after. And if it's multifamily, those are a few. And then Brad Sumrock's based right here in DFW. So that's what you need to be doing if I have a place to start learning. Get the mentorship and the learning and get around people that do this. And really have a basis. When we first visited our very first event, I went in there thinking, let's learn how it works first. That's what we practice. Maybe we can buy 25, 30 units by the end of the year. Before noon on the first day, I learned two things. We could get the resources we need within the matter of weeks, like who the contractors are, who the different supporting companies are. And we could probably get in a syndication and get in a multi-million-dollar property. And it's with all us pooling our money together. And what I just said, man, my goals are too small. So instead of getting in one 25 to 30 unit that we bought ourselves, we invested in about 500 units within 6 months in different properties. Wow. And we didn't put all our money in one place. We would do about our 50K, whatever we're comfortable doing that in a property. Next one comes up, do a different property. That's your way. Even though you're in one asset group of multifamily, you get a little diversification there. You can be in different cities, you can be in different markets, but spread your money around. Don't dump it. Don't take $500,000 and put it in one property.
Yeah, spread your risk around. But also, I will come back to a couple of things that I would like general partners as well as limited partners to have a takeaway on. And that is really investor relations. If you're a limited partner, you're still a business owner. You're going into that business, that venture with a general partner. And there should be expectations set for you. You're not just passive and you don't have a role. You can also expect what I would call white glove service. And I want general partners to deliver that as well. And white glove service means that you are having like an on-site investor day. That's where you're bringing everybody on the property. You want to let them know what's going on, not just have the monthly reports, because let's be honest, while the monthly reports are great, you're reading through those, it's not bi-directional communication. And there is nothing that replaces bi-directional communication when a limited partner can directly ask general partners about specific metrics, about specific indicators, what's going on with a property. It's like a conversation. You can't have a conversation with a monthly report. So I encourage general partner teams to do that, and I encourage limited partners to ask for that. I am I've really become kind of activist on that subject, to be quite honest, Taylor.
I definitely think it bridges the gap and helps.
It bridges a huge gap.
To just
Well,
understand
And it really improves relationships and strengthens relationships. It doesn't do the opposite. It strengthens relationships, even in challenging times.
Right. Well, I definitely thank you for your time. I wanted to ask one last question before I let you guys go. From your entire experience thus far, what has been the biggest takeaway, and what is one thing you wish you learned before you got into real estate?
Okay, so biggest takeaway and one thing that we wish we had learned. Okay, I will say the biggest takeaway for me is relationships are so critical, but also hold people very accountable. Hold people accountable, and always do the work. If you're a limited partner, always do the work. If you're a general partner, always do the work, and don't accept failure, and don't accept results that are lesser than you expect.
Good. That's good.
So I would add to that, if I had one thing, looking back, I wish in 2005 we'd probably taken a little more time and explored multifamily first, because we went the path most people go. It's a path of least resistance. I own a house, so let's go buy houses. And I wish we'd done multifamily from the beginning. And I can't change that, but the opportunities are so great there. And I would have probably been retired 5, 6, 7 years ago. And actually, in our world, we say retire the W-2 job, not you retire, but retire the W-2 job. And I would have been there sooner and all. But do I regret doing the single family? No. It was great learning. A lot of things when it comes to looking at a multifamily in the market it's in, the location, that old real estate thing of location, all those things still apply. But I wish we had gone sooner into that. And really, I think the key thing is whatever you do, you want to be ethical about it. You want to do the right things and insist that others have high standards also. There are players in the real estate area, all different kinds of real estate, that are there to take your money and there to take advantage of you. But do it right, learn what you're doing, and really just go in it and put all your effort into it and get around good people, and you will be happy you did. And if we're any help to any of your viewers, anyone wants to contact us, we are always willing to stop and help someone starting out.
Yes, we definitely are. Because
we were there once.
Yeah, we had help starting out, in single family as well as in multifamily. So we really value talking to people, having those conversations, and helping people move forward on their own wealth journey, because it's always very personal.
Definitely. I thank you for your advice. I think it's been very informative. Where could people find you? I know you guys are podcasters, authors, speakers, investors. Where could people find you?
Well, we do have our website, which is www.excalibur, EXCALIBRE, Texas.com. So excaliburtexas.com. Both Dan and I are on LinkedIn, and I'm going to have that ebook coming out too, Taylor. We didn't really have a chance to talk about that, but I am going to have an ebook coming out, and it's Spilling the Tea. Multifamily investing. Yeah, that is the title. I've got the book cover out, Spilling the Tea, Multifamily Real Estate Investing, Sharon Dann Riddle, because I want to harken back to my family as well as Dan's family. Oh yeah, that's us at Race Fest, a little action.
This is a few months back at Race Fest.
Just a few. I
didn't make it this year. I went with her last year, and I went to the retreat. It's a great group of people.
Yeah, it is. And then also a multi-author book that I'm contributing a chapter to, and we're going to have the launch party for that in September, and it's called The Networking Effect. And it ties in right to the skill sets you really need in real estate investing. You got to network too.
Fantastic. I definitely encourage the viewers to check out your ebook. I actually have a QR code for those of you that are interested in connecting with Sharon and Dan, and just getting a look at your ebook and other resources that you have. Or if you want to schedule a one-on-one with me and my team alongside Sharon and Dan. Thank you very much, Sharon, Dan, for your time. We appreciate your expertise, your experience, your advice. And we also thank all the viewers that were here and those that will be watching. Thank you very much.
Thank you so much for having us. And last word I have on for anyone out there wanting to do it, you want to do anything great, you got to start. Start.
Yeah.
If you don't start, nothing happens.
Well, thanks again, Taylor, because I think it was very fortuitous that I met you at Raise Fest. We made that connection. So, that's a little gift to all our viewers today is Taylor and I connected. You got to find people you need to connect to too.
Definitely. I think it's very important. Those that are watching, connections. It may make a huge difference.
Definitely.
Those
It does.
Do you have any future events, anything happening right now? What kind of deals are you working on right now?
Right now, we're spending a lot of time working on what we call our investor database, connections with people, getting people involved. I'm chasing Sharon on LinkedIn. She's out there. What do you got? Over 8,000 connections.
8,000.
I think I'm running like 2,200. And I won't ever catch up with her, but she's been testing me. I had to get my feet in the water because I couldn't let her leave me too far behind.
I do post daily. Post daily. So I'm really committed to posting daily on LinkedIn, Facebook, and Instagram. So I have a little something for everybody out there. And and I only had all these connections because I started. See, that goes back to what Dan said.
Yep.
You have to start things. And we have a lot of connections on Facebook as well. But, in June, we'll be going to one of our mentors events. That's going to be in Grapevine. So we're going to be doing that, finishing up that ebook. We have another little investment that we're going to be on, and that was a result of us being at a Race Fest retreat in San Diego, where we met a gentleman. Amazing. And you never know where you will be in a room full of opportunities. Definitely. that you can invest in and latch on to, and opportunities really do happen for us all the time, honestly.
Definitely. Well, thank you very much for your remarks. And for those of you that are interested in investing and learning from Sharon and Dan, well, there you have it. Connect with them. They're great people. I definitely recommend staying in touch with them. Thank you, Dan and Sharon. Thank you very much.
Thank you for having us.
Thanks so much.
All right. You guys stay blessed. Have a good one.
You do the same.
Have a great
Thanks
weekend.
again. Bye.
All right. Thanks. Bye-bye.